Okay, walk into any massive, brightly lit, modern supermarket. One of those cathedrals of consumption. What's the first thing you see?
Abundance. Just walls of it.
Exactly, abundance. You see shelves stacked, hundreds of feet high. You see exotic fruits flown in from 5 different continents.
You can get fresh strawberries in January.
In the middle of a blizzard, right. And it all looks like this perpetual solved problem. Like we've defeated scarcity for good.
And for most of our lives, we've been taught to believe that. It's the story of progress.
But the deep analysis we've conducted for today's deep dive, it suggests this is the ultimate and maybe the most dangerous mirage.
Oh, it is absolutely a mirage. The abundance that you see, the thing that allows, billions of people to survive and flourish, it is not a natural state of being.
Not a guarantee.
It's certainly not an eternal guarantee, no.
Yeah.
It's really an industrial magic trick. And it's fueled by 3 extremely fragile pillars that, are now cracking all at the same time.
We've been digging through the source material on this. I'm talking finance journals, UN reports, filings from private family offices. And that fragility you're talking about, it's genuinely sobering.
It really is.
So what are these foundational pillars?
Okay, so pillar number 1 is cheap energy. And specifically, cheap, stable access to natural gas. That is the foundational input for most of the world's fertilizer.
Right, fertilizer.
Pillar number 2, stable weather. A predictable climate, the kind that historically allowed for reliable planting and harvest cycles.
Which we don't exactly have anymore.
Not so much. And pillar number 3 is unrestricted global trade. That's the mechanism that lets us ship, say, Moroccan phosphate to farms in Asia, and then ship the grain from there across the Pacific.
And what our investigation is showing is that all 3 of these pillars, energy, climate, and trade, are fracturing right now.
Under immense geopolitical and environmental pressure. Simultaneously.
And this brings us to the core and honestly the deeply disturbing finding of our deep dive today. While the public are hyper-focused on inflation figures or where interest rates are going or, which AI stock is going to double next.
The day-to-day noise.
The day-to-day noise. The richest, most sophisticated people on the planet are quietly and very urgently moving their immense pools of capital into the one asset you absolutely cannot print.
Cannot download.
You cannot download, and you cannot survive without farmland.
And we really need to be clear. We are not talking about buying a little vineyard for a hobby.
No.
We are talking about institutional capital. The big players, pension funds, endowments, those ultra-wealthy family offices, viewing agricultural soil as the ultimate scarce asset.
And just look at the names. It's not abstract. Bill Gates, famously, is now the largest private farmland owner in America. He controls hundreds of thousands of acres.
Hundreds of thousands.
Yeah.
And Jeff Bezos is in the game. He's acquiring land, too.
And it goes beyond just the American billionaires. We're seeing foreign state actors, specifically the Chinese government, purchasing huge swaths of agricultural land.
Including in really strategically critical regions, like North Dakota, right next to military installation. It's raising all sorts of national security questions.
So the natural question is just, why? Do these titans of tech and finance suddenly want to learn how to operate a combine harvester?
No, of course not. They know something. They know that the era of cheap, abundant food, which was defined by those 3 cracking pillars, is ending.
They're positioning themselves.
They are positioning themselves to be the ultimate owners of scarcity.
So our mission today is a rigorous forensic investigation. We're calling it an investigation into the food control system. This is not about the price of corn futures next week.
No, this is much bigger.
This is a deep analysis into why the sharpest minds in finance are trying to corner the market on survival itself.
And the analysis shows this deliberate, multi-pronged strategy. It's not focused on the price of a loaf of bread at the store. It's about securing the non-renewable inputs before they become too expensive or too scarce.
Or just vanish from the global marketplace entirely.
Exactly. The soil, the water, the fertilizer, and even the seeds themselves.
Okay, let's unpack this. And let's start with the most obvious asset, the dirt itself. For generations, I think we all had this idea of what farmland ownership was.
Hey, it was tradition, right?
Yeah, multi-generational, passed down through families.
Highly fragmented, often illiquid. It was deeply emotional. It was an operating business, not a line item in a portfolio.
Absolutely. It wasn't a financial asset class. But the sources we've reviewed show this massive and I think irreversible pivot. in just the last decade.
A total transit.
A total transition. Farmland has gone from being a lifestyle or an inheritance asset into a full-fledged, high-end financial asset class.
What was the catalyst? What specifically made these institutional investors wake up and realize that, dirt could be a financial weapon?
It was really catalyzed by the environment. After the 2008 financial crisis, you had endless quantitative easing, central banks printing trillions of dollars.
And then more recently, the post-COVID inflation fears just threw gasoline on the fire. Exactly. Sophisticated investors realize that in a world awash with printed money, cash and government bonds start to lose their value. They needed hard assets.
Things you can touch.
Things you can touch. But they needed hard assets that perform two roles, not just one. And this is why you started seeing the pension funds, the massive university endowments, and especially that agile capital, the family offices, just sweeping up millions of acres.
Okay, let's pause on those terms for just a second. Our listener is informed, but what's the real difference between, say, a family office and a standard pension fund in this context? Why does that matter?
Oh, that's a crucial distinction for understanding the dynamic here.
Yeah.
A pension fund, they have incredibly rigid regulations, they have long time horizons, but they're aiming for slow, steady, predictable returns.
They can't take huge risks.
They can't. A family office, on the other hand, which manages the wealth of an ultra-high net worth family, like the Gates or the Bezos families, they operate totally differently. They have way fewer regulatory hurdles. They can take a much longer, multi-generational view. We're talking a 50 or even 100-year outlook.
They're not worried about the next quarter's earnings report.
Not at all. They're significantly more risk-tolerant when it comes to illiquid assets. They're buying survival assets for the next century. And that flexibility makes them the ideal buyers for something as slow-moving and absolutely critical as farmland.
So what's the specific investment thesis? I mean, what's the slick term they use in their boardrooms to justify pouring billions into acquiring dirt and becoming these mega
I
landlords?
call it gold with a coupon.
Gold with a coupon.
And the concept is, it's brilliant in its simplicity, but it's also genuinely chilling when you unpack the implication.
Okay, break it down for us.
So gold is the ultimate inflation hedge, right? It appreciates, it preserves value when currencies get weaker. But gold is non-productive. It just sits there in a vault.
Right, it doesn't do anything.
Farmland, however, does the same thing. It appreciates like gold because the supply is fixed, and in fact, it's shrinking. So that gives you capital appreciation. But
There's the coupon.
there's the coupon. It also generates cash flow. It pays rent. The farmer pays rent to the owner. That rental income is the coupon part.
So it's a hard, appreciating asset that also generates a consistent inflation-linked yield.
It's the perfect vehicle for these massive financial institutions that are looking for long-term stability in what they see as an increasingly unstable world.
The financial thesis seems airtight, I get it. But as we look deeper into the sources, that financial mechanism, it really seems to point toward a much more concerning underlying motivation.
It does.
It's about cornering the market through a guaranteed scarcity.
Absolutely. The ultimate pricing power doesn't come from that slow, gradual appreciation. It comes from controlling the supply and demand squeeze when the market finally panics.
So let's look at those variables.
On the supply side, arable land, good farmland, is shrinking globally. It's shrinking at an alarming rate. We lose millions of acres to urbanization, to development, and, critically, to degradation and desertification. The soil is dying, and you cannot make more of it.
And on the demand side,
The global population just keeps expanding. It's projected to hit nearly 10 billion people by 2050. And it's not just more mouths to feed. Global caloric needs are rising disproportionately as developing nations start eating more resource-intensive foods, like meat.
so, okay, if you have a globally necessary asset
The most necessary asset.
that is fixed and shrinking, and you couple that with a mathematically guaranteed rising demand, well then, controlling a significant chunk of that asset means you effectively become the gatekeeper.
The gatekeeper to the global food supply. That is the sobering reality. And this is the engine that's driving us back to what we have to call the new feudalism.
That's a strong term, new feudalism.
We have to use that phrase because it precisely describes the new economic structure that's emerging. For thousands of years, society was rigidly defined by who owned the land, the nobles, the lords, and who worked it. The serfs, the peasants. We are rapidly moving toward a structure where a handful of global corporate entities and these mega landlords own the most fertile, the most resilient soil, and the traditional family farmers. They're systematically being reduced to tenant serfs.
Tell us what that actually looks like on the ground. What does a modern tenant contract actually say? How does this change the whole relationship between the farmer and the land they've worked for generations?
The change is devastating for rural independence. It's a total paradigm shift. When the farmer owned the land, they absorbed all the risk, sure, but they also reaped all the rewards.
They had ownership,
They
equity.
had equity. Now, the sophisticated capital entity, the family office, owned the land. They collect the rent, that's their coupon, which is a guaranteed financial return for them. The farmer becomes just an operator who has to pay that guaranteed rent.
So who takes the risk now?
The farmer still takes all the operational risk. If there's a drought, if the price of corn collapses, if a new pest arrives, the farmer absorbs all that yield risk while still being legally obligated to pay the corporate landlord. The farmer has been stripped of the most crucial component of their independence, the ownership of the means of production. They've been transformed from an independent business owner into basically an outsourced manager working for a corporate paycheck.
It just fundamentally destabilizes the entire agricultural base of the country. And it transforms these rural communities. The wealth that's generated by that land, it doesn't
Yeah.
circulate in the local town anymore.
No, it flows out. It flows straight to financial centers like New York or London. And that economic triage is systemic.
Okay, so that's the financial control. Now let's pivot from the ownership of the land to the physical foundation of the land, the dirt itself. Because if the land grab is about securing a future asset, the soil crisis is the realization that we are actively destroying the capital base of that very asset right now.
We are. We are sacrificing the capital of tomorrow for the cheap convenience of today. It's the ultimate short-term play.
Frame industrial agriculture's impact on soil for us. Our sources were incredibly explicit about this. They called it a catastrophic failure of long-term planning.
And it is. We need to be specific about the methods. Industrial agriculture is built on two things: monocropping, growing massive fields of just one crop year after year, and heavy reliance on aggressive, deep tillage, plowing.
And that's efficient in the short term.
Exceptionally efficient. But it systematically kills the soil's complex biological system, its microbiome. It's a living thing, and we treat it like it's dead.
So instead of letting natural cycles work,
We just pump it full of chemical pesticides and synthetic fertilizers. We are, in essence, strip mining the soil, treating it like a dead medium that just needs chemical injections to perform, rather than a living ecosystem.
and the result of that strip mining is erosion and degradation. You referenced a specific and truly terrifying data point from the United Nations about the longevity of our soil. We need to emphasize this.
This is the one number that I think everyone needs to hear because it moves this from some abstract academic discussion into an urgent crisis. The UN has warned that at current rates of degradation,
Driven by the farming we're talking about.
driven by aggressive farming, overplowing, chemical dependence. Globally, we may only have 60 harvests left.
60.
60. That translates, roughly, to 60 years of viable topsoil remaining in many critical farming areas before that soil becomes non-productive dust, incapable of sustaining high yields.
This isn't a long-term climate model about 2100. This crisis is well within the lifetime of our children and our grandchildren.
It's a definitive, ticking clock. And we've seen what happens when it runs out. We've seen this before.
The Dust Bowl.
Look back at the American Dust Bowl of the 1930s. That wasn't just a drought. It was a full-on ecological collapse caused by these same aggressive industrial farming practices.
They removed the natural prairie grasses that held the soil in place.
Exactly. They aggressively plowed the soil, and when you couple that with drought conditions, the topsoil literally turned to powder and just blew away.
And that disaster displaced hundreds of thousands of people. It caused widespread famine.
And we are repeating the exact same error today,
Right.
but on a global scale.
So, if these sophisticated investors know the soil is vanishing, how does that translate into their investment strategy? Are they just buying up the degraded land, hoping to fix it?
No, that's not the play. The most aggressive capital is actively shorting the degradation of the planet.
What does that mean?
It means they're being highly selective. They are not buying the cheapest, most chemically depleted land. They are buying land that possesses superior soil health.
So land that has been conserved.
Right. Land that uses no-till or regenerative practices. Land that has high carbon content, which allows for better water retention and nutrient cycling. And crucially, they are targeting areas with deep, existing, and sustainable aquifers, water access.
So they're essentially betting that the price of truly fertile, resilient dirt, especially dirt with its own independent water supply, is going to skyrocket.
Precisely because the vast majority of the global land base will become useless, or at least prohibitively expensive to maintain with all these synthetic inputs.
That is the ultimate hedge.
It is. They see fertile dirt becoming, quite literally, more valuable than technological inputs like lithium or copper.
Because you can't eat a battery.
You cannot eat the components of an electric vehicle battery. The analysis is crystal clear. The financial elite is preparing not for a world where food is slightly more expensive, but for a world where soil is the ultimate non-renewable, non-tradable bottleneck to human survival.
Okay, so land is the foundation. But as we've established, land alone cannot sustain 8 billion people. It needs inputs. And this is where our forensic investigation really uncovered something deeply vulnerable about the entire modern caloric supply. We have to talk about fertilizer, and specifically the fact that we are, in a very literal sense, eating natural gas.
This is a point that needs to be treated as a crucial forensic discovery. I think everyone needs to understand this because it exposes the deep, deep vulnerability of the entire system.
So massive scale caloric output is impossible without nitrogen fertilizer.
And that fertilizer is a direct product of the fossil fuel industry. It's that simple.
Give us the defining, shocking fact again, because this connection between food and energy, it's just invisible to the average consumer.
The fact is this: half of the protein in your body right now, half of the protein in every human body on the planet, exists because of a single, highly energy-intensive chemical reaction called the Haber-Bosch process.
Let's explain the mechanics of that, because it sounds like a footnote in a chemistry textbook, but you're saying it dictates the fate of billions of people.
It is, without a doubt, the single most important scientific breakthrough of the 20th century, maybe next to mass vaccination. Here's how it works. Nitrogen is essential for plant growth, but the air is full of nitrogen that plants can't absorb directly.
It's in the wrong form.
It's in the wrong form. The Haber-Bosch process takes that atmospheric nitrogen and combines it with hydrogen, and that hydrogen is typically derived from methane, which is natural gas, using incredibly high heat and immense pressure to create ammonia.
And ammonia is the base for synthetic nitrogen fertilizer.
That's it. It's an industrial miracle, and it requires astronomical amounts of energy. For every single ton of ammonia fertilizer you produce, you need the energy equivalent of about 33 million BTUs of natural gas.
So the implication of that energy dependency is, it's profound when you consider global population statistics.
It is terrifyingly binary. Look, before synthetic fertilizer, the Earth's natural nitrogen cycle, powered by natural things like legumes and bacteria, could only sustainably support about 4 billion people.
Billion, and we currently have
8 billion people living on this planet today.
So when you do the math,
It means the remaining 4 billion people, roughly half of all humanity, are alive today solely because we figured out how to efficiently turn natural gas into plant food.
here's where it gets really interesting. The inescapable conclusion we have to draw from this is that modern industrial agriculture, it isn't an independent biological system that sustains itself.
Not at all.
It is simply a highly specialized and optimized way of eating fossil fuels. We are consuming natural gas through the intermediary of grain.
That's it.
Which means the entire global food supply is anchored to the volatility and the geopolitical stability of gas pipelines.
That is the hard, uncomfortable truth that defines our modern existence. If natural gas prices spike, or if the supply is weaponized, like we saw during the 2022 European energy crisis, the cost of producing food spikes instantly.
And that leads directly to famine risk?
Directly. In the poorest parts of the world who simply cannot absorb that cost. This dependency is the system's most critical vulnerability.
But that natural gas dependency only covers one nutrient, nitrogen. We have to break down this fertilizer cliff even further by looking at the other two essential nutrients for crops, potash and phosphate.
Right, and unlike nitrogen, which we synthesize from gas in the air, potash, which is potassium, and phosphate, which is phosphorus, are mined commodities.
They have to be dug out of the ground.
They are irreplaceable. They must be physically extracted from the earth, and they are finite. And the geopolitical control over these resources is even more concentrated and, frankly, strategically terrifying than the control over natural gas.
Okay, we need to identify these control points for our listeners. Who holds the geopolitical keys to the global food system through these mined inputs?
The control is terrifyingly focused. For potash, which is essential for a crop's root strength and disease resistance, Russia and Belarus are massive global suppliers. They are sitting on immense reserves.
Russia and Belarus.
For phosphate, which is essential for energy transfer within the plant itself, two major actors dominate. China controls a huge portion of the global mining and processing market, and Morocco holds a near monopolistic grip on the world's phosphate rock reserves.
So let me get this straight. We have built a global food system whose ability to feed 8 billion people is strategically dependent on 4 specific geopolitical rivals: Russia, Belarus, China, and Morocco.
Yes.
That sounds like a terrifyingly fragile game of global supply chain Jenga.
And we saw how fragile it was in horrifying real-world detail just 2 years ago.
Yeah.
When Russia invaded Ukraine, what's one of the first things they did?
They restricted fertilizer exports.
Immediately. They placed restrictions or outright bans on the export of fertilizer and its inputs. The market just seized up. It was paralyzed by the geopolitical shock.
And the result?
Fertilizer prices tripled, virtually overnight. Across the entire globe, this was a direct, one-to-one transmission of geopolitical instability straight into caloric cost.
And this didn't just cause a little inflation at the grocery store.
No. This instantly made the cost of growing food prohibitively expensive for farmers in Africa and South Asia. It plunged millions into food insecurity immediately.
So the smart money isn't just betting on higher prices, they're betting on something even more disastrous. They're betting on food nationalism.
Precisely. The ultimate threat here is a supplier country, say Russia or China, deciding to stop exporting fertilizer entirely. Not for profit, but for national survival.
To feed their own people first.
They would keep their domestic supply secure to feed their own population and use their resource dominance as a defensive weapon. If China cuts off phosphate exports tomorrow, or if Russia fully weaponizes potash, yields around the world would fall catastrophically.
And widespread famine becomes an economic certainty.
An absolute certainty. The sophisticated capital investing now understands that this geopolitical fertilizer cliff is the single greatest immediate non-climate-related threat to global stability.
So they're securing land that they hope can survive on lower inputs or
they're betting directly on the companies that own those mines.
Okay, so if the land is the body and the fertilizer is the synthetic fuel that runs it, then water is undeniably the blood. And the blood is drying up across critical food production regions.
It is.
Let's move to this looming water war. Let's focus on the American West, which is a key source of global food production.
The crisis in the Colorado River Basin is the perfect case study in compounding scarcity. I mean, this single river system supplies water to 40 million people across 7 U.S. states.
And critically, for our discussion, it irrigates
5 million acres of extremely productive farmland. But due to over-allocation and persistent drought, we are draining it faster than nature can possibly replenish it. Lake Mead and Lake Powell, those enormous reservoirs, are at historic, dangerous lows.
which threatens not just farming, but hydropower and drinking water for major cities.
Everything. The entire system.
And of course, Wall Street is never late to a scarcity crisis. Our sources are indicating that hedge funds and specialized private equity groups have quietly defined water rights as the next great asset class.
And it's separate from the land itself. That's the key.
How does that work?
This is where the legal nuance becomes crucial. In most of the arid Western states, the system of water law is governed by something called the prior appropriation doctrine. It's often summarized as first in time, first in right.
So unlike the eastern U.S., where water is tied to the land.
Correct. That's riparian rights. Here, in the West, water is a tradable property right that is separate from the dirt. You can buy the legal right to use, say, X amount of water from a river or an aquifer, and then you can sell or lease that right to the highest bidder.
Irrespective of whether the farm underneath still needs that water to grow food.
It doesn't matter. The right is a separate piece of property.
That distinction, water as a tradable commodity, is what financializes it. It severs its intrinsic link to caloric output and just turns it into a financial instrument.
Precisely. And that structural mechanism leads directly to the inevitable water war. You just have to follow the economics. When a resource is finite and shrinking, who is the highest bidder?
It's certainly not the farmer.
It's not the farmer growing high water use, low margin crops like alfalfa, which, by the way, is often exported overseas to feed livestock. Agriculture in the West uses about 80% of the allocated water.
80%.
Yet it only contributes around 2% of the region's entire gross domestic product.
That economic math is brutally clear. The value created per gallon of water used by a farmer is orders of magnitude lower than the value created by a modern industrial consumer.
Correct. And the sophisticated capital, the hedge funds, they know exactly where that water must flow. It's going to flow to the higher value industry.
To cool the data centers for Silicon Valley.
To Semiconductor fabrication plants that need ultra-pure water. To wealthy suburbs that want secure drinking water and to maintain their green lawns. The farms, unable to compete on price for their own senior water rights, will be incentivized or legally forced to dry up.
So this isn't just about drought. This is about privatization, financialization, and inevitable economic triage in the face of scarcity.
That's it. The land grab is intimately paired with the water grab. And in that war, the farms are always the sacrificial lamb.
So we've investigated the physical assets, the land itself, the soil degradation, the geopolitical fertilizer cliff, and the financialization of water rights. Now let's shift our deep analysis to the intellectual assets.
The source code.
The source code of life itself, the seeds. This layer of control, this intellectual property lockdown, is perhaps the creepiest and most unassailable form of the control system that we uncovered.
It really represents the final proprietary layer of the whole food control system. The logic is, if you can't fully own all the land and you can't fully control all the water, you can at least control what grows in the ground and how it interacts with the chemical system you also sell.
And the concentration of power here is astronomical. It happens so quickly through a series of massive mergers and acquisitions.
So fast.
Detail that concentration for us. Who holds the keys to the global genetic library of our staple crops?
It's essentially a terrifying oligopoly. Through all this strategic consolidation, just 4 multinational corporations now control over 60% of the entire world's proprietary seed market.
60% from 4 companies.
Especially for the major cash crops like corn, soy, and cotton. The names are familiar by now. Bayer, which of course absorbed the giant Monsanto. Corteva, which was a major spin-off from the Dow-DuPont merger. ChemChina, a powerful Chinese state-owned enterprise. And Limagrain, a major European player.
And this isn't just about selling a bag of seeds anymore, is it? This is a fundamental philosophical shift in how food production works.
It's a total shift.
They've transformed biology into an annual recurring revenue business model. It's a model we're much more used to seeing in, Silicon Valley software companies.
That is the profound shift right there. The farmer no longer owns their seeds, they license them. It is the software as a service, or SaaS, business model applied directly to agriculture.
So the farmer is paying a subscription.
An annual subscription for the right to plant the crop. They buy the patented seeds, they plant them, they harvest them, but they are strictly forbidden by their legal licensing agreement from saving any of that seed stock for the next year's planting.
They have to repurchase the seed and renew the license every single year.
Every year.
And this creates a closed, proprietary ecosystem that's incredibly lucrative for the corporations, but it creates total vendor lock-in for the farmer.
The lock-in is the genius of the business model. These seeds are genetically engineered, often to resist specific chemicals. Think of the famous Roundup Ready technology.
Right.
So who sells the proprietary pesticides and herbicides that the seed is engineered to handle?
The exact same companies.
The exact same companies. So the farmer is locked into buying the seed license and the chemical inputs from the same oligopoly. It creates this recurring, high-margin, closed-loop revenue stream that is extremely predictable for their investors.
The ultimate chilling element of this entire control system is the legal warfare that's waged against any farmer who dares to do what has been a 10,000-year-old human tradition.
Saving seeds.
Just saving their seeds.
The primary mechanism of enforcement is the patent infringement lawsuit. Historically, farming was a closed, self-sustaining loop. You harvest, you save the best seeds from your best plants, you plant them next year, and you slowly improve the stock.
And
now, if a company's patented seed happens to blow onto a neighboring field, or if a farmer tries to save their own harvested seed stock, even accidentally, the corporation can and will sue them for violating their intellectual property.
do we have specific examples of this? Because it sounds so unbelievable.
The case of Percy Schmeiser, a Canadian canola farmer, is the most infamous example we found in the sources. Schmeiser had Monsanto's patented Roundup Ready canola found in his fields. He claimed it just blew in from a neighbor's truck or their field.
Which seems plausible.
Very plausible. Monsanto sued him for patent infringement, claiming he illegally grew their invention. The case went all the way to the Supreme Court of Canada.
Now, what did they rule?
And while Schmeiser didn't actively buy the seed, the court affirmed that the patent rights were violated simply because the patented genetic material was found growing on his land.
Wow. That established a chilling precedent.
A massive one. The monopoly has effectively patented the very act of growing, harvesting, and saving seed. The core biological function of farming itself is now proprietary.
So the smart money, the investors, they look at this and they just see the ideal financial vehicle. It's a recurring revenue stream, the subscription model.
Incredibly high barriers to entry. You need massive R&D and legal firepower.
And it's an essential product that literally sustains human life. It's an unbreakable biological and legal monopoly.
They own the source code of the food supply. Even if land becomes scarce, the genetic quality and the resilience of that patented seed allow the company to command an essential, non-negotiable price point.
Yeah.
This layer of control is perhaps the single most potent long-term defense against global caloric uncertainty.
So after laying out this genuinely alarming control system, the land grab, the vanishing soil, the energy-dependent fertilizer cliff, the water wars, the IP lockdown, the question for the listener has to be, is there a technological out?
Right. Is there a way out of this?
Is there a way for us to bypass this entire terrestrial physical monopoly that the billionaires are currently cornering?
This is exactly where the sophisticated capital is hedging its bets. They recognize that the traditional terrestrial agricultural system is collapsing under the weight of its own unsustainability and its dependency on cheap fossil fuels.
So they're pouring investment into an alternative.
Heavily into controlled environment agriculture, or CEA, which primarily include vertical farming.
Okay, explain how vertical farming is pitched as the ultimate technological savior. How is it the direct answer to every single crisis we've detailed today?
Well, vertical farming is essentially growing food indoors, often in these multi-story, stacked, sterile, high-tech warehouses, usually located right near cities. They use highly controlled LED lights, and often hydroponics, which is water-based, or aeroponics, which is mist-based.
And the pitch to investors must be incredibly compelling.
It is, precisely because it de-risks food production entirely. First, it solves the water problem. It uses up to 95% less water than field farming because the water is constantly recycled in a closed loop. There's no evaporation, no runoffs.
Okay, that's a big one.
Second, it solves the soil problem. You don't need any soil, so that eliminates erosion, degradation, and any dependency on topsoil.
Solves the fertilizer problem too, I'd imagine.
It addresses the fertilizer problem. Exactly. The nutrients are delivered precisely into the water in that closed system, which minimizes waste and removes the reliance on those volatile geopolitical supply chains for bulk fertilizer.
And fourth, it solves the geopolitical and trade problem.
Because you can build a vertical farm in Toronto or Dubai or Singapore. You can decouple your food supply from Russian gas pipelines or Moroccan phosphate reserves.
It sounds like a panacea, a guaranteed controlled environment solution that makes us independent of climate, geopolitics, and scarcity. But this system has one massive foundational vulnerability, doesn't it?
It is one massive, unavoidable anchor, and that is energy.
Which-
Vertical farming requires colossal amounts of electricity, primarily to power the specialized LEDs that have to replace the sun. This is the single biggest operational cost and the key point of vulnerability. You are trading your reliance on natural gas for fertilizer for a massive reliance on the electric grid.
So let's frame this as the necessary debate for the listener. The success of vertical farming as a technological hedge against this calorie monopoly, it hinges entirely on solving the energy crisis first.
That is the essential premise.
Yeah.
If we solve the energy crisis, if we can create cheap, clean, abundant power.
And we've talked about this before, the potential of advanced nuclear, like small modular reactors or SMRs.
Right, if that becomes a reality, then vertical farming becomes viable, it becomes scalable. And it could potentially break the land, water, and soil monopoly. If you can grow massive quantities of food indoors with a guaranteed yield at a low cost, the value proposition of owning vast acres of vulnerable outdoor land diminishes dramatically.
So in that scenario, vertical farming is the savior.
It could be, yes.
But, and this is the crucial counter-argument, if we fail to solve the energy crisis, or if energy prices remain volatile and high, which they have for the past few years,
Often driven by the same geopolitical instability that impacts fertilizer.
then vertical farming is just an expensive, high-tech distraction.
It becomes a niche luxury product. It's an incredibly expensive way to grow high-end microgreens and lettuce for wealthy people in city centers. But it cannot currently compete on the unit economics of staple crops, the corn, the wheat, the soy, that actually feed the masses.
So if the energy crisis persists, it's a technological fantasy.
It is. It's a final, desperate efficiency squeeze, a way to extract the maximum yield from biological systems before the entire supply system collapses. In that scenario, it provides no systemic solution for the 4 billion people relying on cheap calories.
Beyond just the vertical stacking, are there other ag tech investments these investors are making? They can't be putting all their chips in the indoor basket.
No, of course not. They're also investing heavily in what's called precision agriculture, which is designed to make the existing outdoor farmland less wasteful and more productive.
What does that look like?
It involves using AI, advanced sensors, and robotics to monitor individual plants. Think of AI-driven tractors that can optimize every single seed placement, or drones that can spray a single weed with a microscopic dose of herbicide, or even a laser instead of blanketing the entire field.
That sounds less like a systemic solution and more like a high-tech way to just delay the inevitable collapse.
It is.
It increases efficiency, sure, it lowers input usage, but it doesn't solve the core problems of geopolitical fertilizer dependence or water scarcity in the American West.
It buys time. It's an incremental improvement. But the sophisticated capital is investing in all of these options simultaneously. They are buying the resilient land and buying the technology that might make that land more productive, which is precision ag, while also investing in the technology that attempts to bypass the land entirely, which is vertical farming.
They're covering every possible angle of the scarcity crisis.
Which just proves how seriously they view the long-term threat.
Okay, let's summarize the forensic findings of this rigorous investigation into the global calorie system. The era that we all grew up in, the era of cheap, abundant, year-round food, was a massive, fleeting historical anomaly.
It really was.
And it was built on 3 unsustainable inputs: cheap natural gas, a stable climate, and unrestricted global trade. And that anomaly is, without a doubt, ending.
Our deep analysis has uncovered a clear and frankly aggressive playbook being executed by the world's largest and most sophisticated capital pools. They are positioning themselves for a future defined by inflation, geopolitical instability, and extreme scarcity.
We've seen them quietly secure the most resilient land,
Buy up the tradable water rights,
own the mining companies that supply the fertilizer,
and ruthlessly control the intellectual property of the seeds. They are actively cornering the market on the one essential thing humanity cannot possibly live without.
So, if you are the listener trying to hedge against this looming calorie monopoly and you don't happen to have the capital of a Bill Gates, what is the smart money playbook for an individual or a smaller investor to consider based on these findings?
Okay, we can detail 3 main financial avenues for hedging against this based on where the pricing power is concentrated.
Right.
1. Agricultural commodities as an inflation hedge. If you accept the premise that the era of cheap food is over, then investing in products that track the price of staple commodities like wheat, corn, and soy is a fundamental inflation hedge.
How do you do that?
You can access this through exchange-traded notes, or ETNs. They track the underlying price of the commodity without you having to, hold a silo of wheat in your backyard. As the price of basic sustenance rises, these assets appreciate and they protect your purchasing power.
Okay, that's 1. What's 2?
2. Invest in the input suppliers, the monopoly players. Don't just invest in the farms. Invest in the monopoly providers who have the ultimate pricing power. Specifically, you focus on companies that mine the crucial commodities, like potash and phosphate.
So companies like Nutrien or Mosaic.
Exactly.
Yeah.
And you look hard at the companies that own the seed intellectual property, like Corteva. Regardless of geopolitical volatility or how good the harvest is, they command the price for the essential input that is required to grow the food.
And number 3.
3. Land and water as a survival asset. If your capital allows acquiring land, even smaller plots, is perhaps the purest long-term hedge against systemic collapse. But you have to focus on the critical inputs we detailed. Acquire land with superior, healthy soil, and most importantly, secure water rights. This isn't just an investment. It is the acquisition of a non-depleting, non-printable asset essential for basic survival in a resource-constrained world.
That covers the financial playbook. But our investigation suggests that the only pathway to truly breaking this centralized proprietary monopoly is to starve it of its dependency on these systemic choke points.
Absolutely. The final non-financial pathway is supporting and building the local loop. When you buy directly from local farmers, especially those who still own their own land and, crucially, still save and manage their own non-proprietary seeds, you are supporting a decentralized, resilient supply chain.
And that local loop is the only one that won't instantly break.
It's the only one that won't break when a multinational corporation decides to halt fertilizer exports, or when a hedge fund sells its water rights to a data center, or when a seed company triples its licensing fees. It shifts the power, the resilience and the wealth back from the mega landlords and the global oligopolies to the community level.
So what does this all mean for the informed listener?
It means we have all been complacent. We've been lulled into a sense of security by that supermarket mirage. The shelves look full today, but the richest people on the planet are restructuring their multi-billion-dollar portfolios for the day those shelves are empty.
They aren't betting on a modest increase in the price of lettuce.
No, they are cornering the market on survival itself by controlling every single critical choke point, from the underlying dirt to the water flowing across it and the very DNA of the crops that grow in it.
The ultimate final thought for you to explore isn't about the current price of your groceries or the debate over whether vertical farming can save us. It's about the true hidden cost of dependency that is built into every single calorie you consume. Ask yourself, who owns the ingredients that allow me to live, and how secure is my supply chain if the cracking pillars of energy, climate, and trade finally collapse? The answer might fundamentally change how you view your next meal.